There's a category of money sitting untouched for disabled Canadian veterans over 60 that has nothing to do with Veterans Affairs Canada, nothing to do with your disability pension paperwork, nothing to do with the service officer who handled your file, and nothing to do with anything you have ever filed at the federal level. These dollars live at the provincial level. They are funded at the provincial level. And in most provinces, that money has been appropriated and available for years while the veterans it was set aside for never touched it. Not because they got rejected. Not because they qualified on paper and lost. Because nobody at federal VAC, nobody in Ottawa, and in many cases nobody at the provincial ministry either has ever sat a disabled veteran down and said, "Here is the list of what your province owes you, and you are not collecting it." 5 province-level benefits that are free or heavily subsidized for disabled veterans over 60. Some are tied to your home. Some are tied to benefits and income. And the last one, the biggest one, exists in every province in the country, no exceptions, and is the one almost no one applies for. Veterans who qualify for these and never apply routinely leave somewhere between $3,000 and $8,000 a year sitting on the table. If your reaction is, "My province does not have this," or "I checked years ago and got told no," hang on. Eligibility rules on several of these were rewritten in 2025 and 2026, and some of those rewrites pulled in veterans who were previously just under the cutoff. The no you got 2 years ago might not be the no you would get today. Hit subscribe and turn on notifications right now because every week I cover the real financial information that affects seniors and veterans directly, the rules that changed, the protections you already qualify for, and the steps that actually move money into your bank account. This is exactly the kind of content I publish every single week and you do not want to miss it. Now let us get into it. These rules are set province by province and often municipality by municipality, so exact numbers and thresholds shift depending on where you live. Treat everything here as a starting point for a phone call, not the final word. Your provincial Ministry of Finance, your municipality tax office, or the Veterans Affairs Canada office that handles your region has the version that actually applies to you. And if this kind of provincial breakdown is useful, subscribe and turn on notifications because this is exactly the corner of veteran benefits most channels skip. Everyone covers the federal VAC disability pension and the pain and suffering compensation chart. Almost nobody sits down and works through what your province owes you separately. Benefit 1, the Disabled Veteran Property Tax Deferment or Exemption. Every province offers some form of property tax relief for disabled or senior homeowners. What that looks like varies enormously. In British Columbia, it is the Property Tax Deferment Program, which lets qualifying homeowners postpone their annual property tax bill through a low-interest loan held by the province, with updated rules for 2026 that made access meaningfully easier for disabled homeowners and for surviving spouses. In Ontario, the equivalent is the Property Tax Credit for seniors and persons with disabilities, claimed at tax time as part of your annual return. In other provinces the equivalent sits at the municipal level, with a reduction in your home's assessed tax value. Depending on which source you check, somewhere between 10 and 15 plus provinces currently offer some form of deferment, credit, or outright exemption, and several expanded coverage in their 2025 and 2026 budgets to include veterans who were previously close to but just under the income or age threshold. Here is the part that trips people up. This is never applied automatically. VAC does not notify your municipality when your disability pension status changes. You have to file a separate application, either through your province's deferment office or through your municipal property tax office at tax time. In some provinces you renew it annually. In others the credit or exemption carries forward as long as your eligibility does not change. Put real numbers on it. The average Canadian property tax bill runs between $3,000 and $5,000 a year. In higher tax municipalities in Ontario, British Columbia, Quebec, Nova Scotia, or the Prairies, bills of $6,000 to $10,000 a year are not uncommon. A full deferment or credit in one of those municipalities is worth that entire amount every year for as long as you continue to qualify. What to actually do? Call your provincial Ministry of Finance or your municipality property tax office and ask by name about the disabled or senior property tax deferment or credit. Ask whether the program covers you based on your age and disability pension status, or only on low income. Have your notice of assessment, your VAC disability decision letter, and proof of residency ready. Most applications take under half an hour to file. A couple of things worth knowing before you call. First, if you moved from one province to another, your old relief does not travel with you. You have to apply fresh at the new address, and a surprising number of veterans assume it carries over and simply never file again. Second, on deferment the deferred amount is still technically owed, but the interest charged is far below market, and the province only recovers the balance from your estate when the home is sold or transferred. Third, a few provinces extend a version of this relief to a surviving spouse after the veteran passes. So if you are the spouse of a veteran who had this credit or deferment, it is worth confirming whether you continue to qualify rather than assuming it ended with their death. Benefit 2, the Veteran Vehicle Registration Discount. The vast majority of provinces offer a reduced or one-time fee for veteran license plates, and several waive standard registration renewal fees entirely for disabled veterans. Most provinces levy a small one-time administrative charge to verify service through the Royal Canadian Legion or a comparable organization, usually in the range of $5 to $30, after which annual renewal fees are often waived for eligible veterans. In provinces like British Columbia, Alberta, Manitoba, and Newfoundland, the one-time fee is around $5 for the veteran plate itself, and there is no annual registration renewal premium associated with the veteran classification. Several provinces expanded coverage in the last 2 years to explicitly include medically released veterans and those receiving a VAC disability pension, groups that used to be left out. On its own, this is not a huge number. Annual registration fees in most provinces run between $50 and $300 a year per vehicle, but it is money that qualifying veterans pay year after year for no reason other than never filing the one form that stops it. Like the property tax deferment, it does not happen on its own. You apply once through your provincial motor vehicle registry with your service verification and your VAC disability decision letter in hand, and in many cases you walk out with the veteran plate the same day. Call your provincial registry, ask specifically about the veteran plate program, confirm the proof of service, and ask whether the plate covers the registration fee as well or only the plate itself. It is a small dollar figure compared to the property tax relief, but it is also one of the fastest wins on this list. Usually a single form submitted once with a permanent effect for as long as you own the vehicle. The kind of thing worth knocking out the same week you handle the property tax filing while you already have your service documents pulled up. Benefit 3, what actually happens with VAC disability and your taxes. Here is something worth clearing up directly. VAC disability payments, including the disability pension and the additional pain and suffering compensation paid monthly, are exempt from income tax under the Income Tax Act. There is no province where they are taxed. In most provinces this happens automatically because the Canada Revenue Agency strips VAC payments out of taxable income before they ever reach your annual return. You typically do not file anything extra for this piece. Where provincial level variation actually shows up is on a different income stream, military retirement pay, which is taxed very differently depending on where you live. Every province treats military retirement pay as ordinary income, but several provinces offer provincial deductions or tax credits specifically aimed at veterans, and some allow retirement income to be split with a spouse. The largest dollar impact comes from making sure you are actually claiming every provincial deduction you qualify for, including the age amount once you reach 65, and where applicable the pension income amount, which is often missed because military pension income is sometimes not flagged correctly on slips. If you are drawing both VAC disability and a military pension, this is worth a real conversation with a tax preparer who specifically works with veterans, not because your disability payment is at risk, but because the pension side might be more heavily reduced by provincial credits than you are currently treating it. And some provinces allow you to amend prior returns to recover overpayments. Age matters here too. A number of provincial rules that do not stack with military pension are structured to layer on after you reach 65, shielding additional income from provincial tax. If you are over 60 and have not checked whether your province stacks an age-based credit on top of the military pension deduction, that is a 5-minute phone call that could change what you owe every April. Benefit 4, the Veterans Independence Program and the Home Adaptations Grant. VAC runs 2 programs designed to help disabled veterans stay in their own homes that almost no one talks about on camera. The Veterans Independence Program, or VIP, provides an annual tax-free amount to help pay for housekeeping, grounds maintenance, snow removal, and personal care services. The 2025 maximum reimbursement was approximately $7,700 per year, indexed annually, and the actual amount you receive is based on the services you are approved for. On top of VIP, 2 home adaptation programs allow lifetime grants to make changes to your home so you can keep living in it safely. The Home Adaptations for Veterans Independence Program, known as HAVI, offers a lifetime grant of up to $40,000 per disability for modifications like ramp access, roll-in showers, lowered counters, and stair lifts. A second stream, focused on caregiver homes, offers up to $5,000 per disability for adaptations to a primary caregiver's home. What matters here is that these are entitlement-based, not means-tested. Your income does not disqualify you from HAVI, and you do not need to be at the lowest disability percentage to qualify. Several expansions in the last 2 years made the program accessible to a much broader group of disabled veterans, including those with musculoskeletal conditions that were previously borderline. The dollar impact can be substantial. A stair lift alone runs $6,000 to $12,000 installed. A fully accessible bathroom renovation runs $30,000 to $60,000. A clean HAVI approval for the mid-range veteran can cover the entire cost of the most expensive home modification they will ever face. If you are over 60, still living in your own home, and using mobility aids, or planning to install them in the next few years, call your VAC office and ask specifically about HAVI. Ask what documentation they want, ask whether your disability percentage qualifies, and ask about the lifetime cap. This is a benefit that has been funded for years, that is sitting in your account, and that almost no veteran in Canada ever reads about unless a service officer mentions it. Benefit 5, the Veterans Emergency Fund. This is the one every veteran in Canada can access through VAC, no exceptions, and the one most veterans have never been told exists. The Veterans Emergency Fund is a tax-free grant administered by Veterans Affairs Canada to help veterans and their families facing a financial emergency. It is not traditional welfare and is not heavily means-tested. It covers essentials like food, rent, mortgage, utilities, medical costs, emergency travel, and in many cases vehicle repair or small home repairs. What makes this one different is that the money is real, it is a check, not a credit or a deferment, and it exists in every province with no property requirement and no prior federal application needed. Decision makers at VAC are authorized to approve a maximum of $2,500 per veteran per fiscal year, with up to $10,000 in exceptional circumstances, including interprovincial medical travel and major emergency home repairs. That is money that does not touch your VAC disability payments, your Canada pension, your old age security, or your tax liability. The catch is that funding is allocated annually, and a lot of veterans who wait until they are already in crisis and ask in the last quarter of the fiscal year find that the money has already gone out to earlier applicants. Veterans who ask early, even before they are in crisis, sit down with a service officer, and identify the specific assistance they need have a real shot. Veterans who wait until the bill is already past due typically find the process moves slowly. Grant amounts typically run between $500 and $2,500 per application, with the higher $10,000 exceptional cap reserved for situations like urgent medical travel outside the province, major utility shutoffs prevented after a job loss, or replacement of essential appliances that have failed. Call the Veterans Emergency Fund line or your regional VAC office directly. Ask what documentation they want, describe the situation clearly, and apply the moment the emergency is on the horizon, not after it has already done damage. A disabled veteran over 60 who qualifies for all 5 of these and has never applied for any of them is realistically leaving somewhere between $3,000 and $8,000 a year on the table. Not because the money is not real. Not because they were turned down. Because nobody ever told them to ask. So here is the full checklist. Call your provincial Ministry of Finance or municipality tax office about the disabled or senior property tax deferment or credit. Have your notice of assessment, your service record, and your VAC disability decision letter ready. Call your provincial motor vehicle registry about the veteran plate program and confirm whether the registration fee waiver applies. Sit down with a veteran-focused tax preparer about how your military pension is being taxed at the provincial level, since your VAC disability is already exempt everywhere. Contact your VAC office about HAVI and the Veterans Independence Program before your next home modification or before the next major cleaning or grounds bill lands. And call the Veterans Emergency Fund line or your regional VAC office today about emergency assistance funding and ask what the next application window looks like.